What's going on, guys? Welcome on into today's stream. We are looking at the overall markets or at the S&P right now into the weekend, and we got a red day. Today's honestly pretty wild. I mean, we haven't had, I guess if you go back to last Friday, it's kind of living up to that, not to the same degree of downside, at least for now. Only got an hour left, but pretty wild day. I mean, we had a pretty strong finish yesterday. Went green briefly. Went green into the close yesterday afternoon. We'll talk about this zone that we pointed out on Wednesday in just one second. But then we just absolutely ripped up, gapped up. We had jobs data this morning. Market seemed to like that, and boom. But there's a big but there. We came up into this spot, 401. 401.50 was the the exact high, kind of 401.56 to be exact, I guess. And we got shellacked. Right there. And that was a key area of support back here on the 29th, and it was an area of resistance on Wednesday. So that was going to be a key spot. We had, this little zone charted out and drawn in, and then once we got up there, I was looking at this morning. I got slapped in the face because I actually had, not the small account. The small account was actually fine. We were green today, but I took calls anticipating a bull flag kind of breakout, and got stopped out obviously on that as it fell off and broke below VWAP. Got shellacked there, but I was looking like, hey, if we got this breakout, I was looking for a pretty big move and a pretty big squeeze out into the end of the day. Just obviously didn't happen, given because a lot of people were looking to go short, and if we got a pretty big rally, and it held up, I think that into the end of the day, you'd get that continuation kind of further squeeze out, but that wasn't the case. We got slapped right back down, so that area is going to be a key spot of resistance now going forward. And we'll keep it on high watch, and we'll have the lines drawn in. So, we get up there again, we'll know it's a key spot to watch, right? If we zoom things out and you go to the daily view on SPY, this zone right here, 390, we talk about this spot, 390 was going to be our spot. Not to mention that also, that 401 area, guess what? It's the 50 SMA. So, I was surprised that we didn't bounce at all off the 50 SMA. I thought we were going to bounce around 400 and come back to like 405, something like that, and then potentially go lower if we're going to go lower. We just kind of sliced right through that 400 and went to 390 very, very fast. Yesterday came down to just about pretty much on the nose, 390 on the nose, and then from there had the move today, and then now we're kind of come back down. But we're right back into this zone again as we speak right now, potentially going to test low of the day here on SPY. But we had this spot, it was a prior area of resistance, was a support back here, and we're looking to see if that 390 area holds on SPY. Now, if we get a little bit more of a further downside move, we still got the bigger picture, inverse head and shoulders potential setup. That's, something to keep an eye on that we'll watch. Here's what we're looking at. And then if, wherever we end up bottoming, but if that's a possibility, we got CPI coming up in about a week and a half. So the CPI on the 13th of September will be pretty important, I think, in determining if that's going to be the case, or we're going to flush right through and fill this little gap right here, which we thought 2 weeks ago, doesn't look like it's going to happen, and it now looks a lot more realistic. It's only about 10 to $13 to the downside, fills that gap, which is what I ultimately wanted to months or weeks back, about a month back, right? Ultimately, that's what I wanted to see, and we didn't end up getting it, and maybe we'll get it months later, but it is what it is. Market works in weird ways sometimes, but hope everyone is doing well, and it's a nice little Friday afternoon, so hopefully we'll have some fun, and we'll talk about some good stuff. Having a great day. Overnight call for the job support. Nice. I did not. I had two chop city stupid shit plays that I like. Looking back, if I had just simply done what I had originally was thinking and bought calls in this zone yesterday, which I did not do. I actually bought them the day before I started buying them, and then I took the loss and then didn't re-enter because I was concerned that we weren't going to get that. I thought that the weakness into the close on Wednesday, I think, or maybe it was a Thursday. I forget what it was. Maybe I had it the day before, whatever. I thought the weakness that we saw into the close was going to be kind of a fake out move, and we're going to kind of gap up and push higher. We didn't get that. We kind of got that move that came out a little bit later. And then today, obviously playing the bull flag, got slapped on that. But small account did okay. I had a 3x or potential play that I obviously didn't hold for the 3x, but I had bought puts. I bought calls on IWM this morning down in here. I was buying calls. And the contracts I was looking at the low, a reason why I held through this, I was actually scaling in very, very slowly, was not like a huge position. And I was looking for it to kind of hold up, versus the highs of yesterday. So I was going to give it, some wiggle room, and I bought next week expiration. So it wasn't like super, super short-term expiration. And I was looking for a move back to VWAP or potentially higher, but I was going to take profits into VWAP as I started buying, around 181, 50 and below. And I was going to stop out roughly around that. If we got a 5-minute close under 181, I was not going to like that. We never did. And these contracts from the low went from like 30 cents. And then when I checked back up in here, somewhere up in here, I forget exactly where it was. They were like 90 something cents for I think it was for Tuesday expiration because Monday markets closed. So, it's crazy how these things can move. But I took a little chunk of that, and the small account finished the week green. So I can't complain. Small account's been doing pretty well. We're back up in the green overall on the challenge, so I'm happy to see that. And we'll see where it goes. I feel like the data that we've been getting has been sick. Like some of the data, I'll pull this up really quick too. It's funny. I was just looking at this too. This performance on the account tells me Monday and Tuesday are my worst days. Friday's by far and away the best day on this account. Just trading the past like 2 months. So that's kind of cool. It's cool data to see, But then again, I do take more trades on Friday, generally speaking. There's 15 trades. That's less data on Monday, Tuesday, Wednesday. So it's, as more data comes in, it's going to be easier to see. But it's cool. It's really cool. There's so much more to dive into, and I'll be, really diving into the details of all that stuff. But for now, it feels like it's funny if you look back at SPY, my thought process was, and I'll talk about this in tomorrow's video too. The thought process was that, okay, like if I can, go away and be away from the markets and come back at roughly the same account value with the hedges, I'm happy. That's exactly what happened. I came back, account was around 20K. That's when I left, around 20K. Fine, took the hedges off. Like, okay, great, they did their job. And then today, this past week, just getting slaughtered. Well, the biggest one, I think, two stupid, I guess, SPY plays, but then really it's SOXL. Soxel, that semis got hammered. I did buy a decent chunk though, so now I'm up to a position size that I'm pretty happy with on Soxel. Maybe this thing goes to new lows, I don't know, but I started buying some more February expirations, so we'll see. But I like this. I like the pressure that we're seeing there, so that's kind of why I guess we took a decent hit. And also TLT. Oh yeah, I forgot TLT. TLT, I'm buying some January expiration calls. TLT is is the 20-year bond ETF. This is going to go up when yields go down. So I watch the 10-year. You can watch the 2-year, the 30-year, whatever. In general, I look at the 10-year for a broad kind of look at at bonds. They're generally all going to do relatively the same. Their charts look different comparing them all individually, but they're generally going to move together. So TLT, really, this is the biggest. I guess this is also another reason because we had a pretty big move down from, was that Wednesday into Thursday? And I've been building a decent position on this too, so that's why that took a beating as well. But I did buy, I bought more contracts, and I've got the position, which I was saying, back in here, I started averaging in whatever it was back in here, but I was saying like I still think this is going to be one that I want to get a nice fat position on, and we've got that. So now let's see what TLT can do. We've got the fat position that we want, and now we got about six or so months to see if it works. That's the plan on TLT. So outside of that. Hasn't been a terrible week, I guess. It gave me opportunities to buy some. Also, I'm going to probably get filled on some puts that I sold. Here's the Robinhood getting slaughtered. I guess it's getting slaughtered, but when you're in more positions, and we're also slightly on margin here too. So it's like, okay, you're asking for a little bit of, or more volatility, but it's only down 5%. Given what I'm in, I'm not really going to complain. Cold is doing, the cold position is doing well. The short natural gas is doing pretty well. Outside of that, everything else is pretty much down. Not as bad. Sold some options today. The puts that I sold, SoFi, $6 put. So we got to check on SoFi. I think it looks like we're going to get SoFi, which I'm happy to do after we got the announcement on the loan stuff. I feel much more comfortable now with some more clarity there in SoFi, especially given that it's like essentially at the lows. Like technically it's building a higher low. If this low from like this week holds, it's technically building a higher low, but I sold a $6 put. So I got paid to buy 100 shares of SoFi, which really isn't that risky, to be honest. It's a fairly cheap stock in that portfolio. Got paid like, I forget what it was, 10, 20 bucks, 25, something like that. So I'm going to be around flat cost basis wise if it finishes around this area right here today. So we're probably going to get SoFi, and then we're also going to get, this is the last kind of more risky exposure that I want. We're going to get, where is it? Soxel 13 put. Unless we finish super strong in the next like 45 or 55 minutes, I have a 13 put that I sold on Soxel. Oh, it's right there. We're right at it. So we're going to have to watch this one closely. If we rally into the close, I'm not going to get it. But I got to check what I got filled on this one. So Soxel, I sold a 13 put for, let's see, I sold it for 34 cents. So I got paid $34. So either I'm going to make $34 and I'm not going to get filled, and it is what it is, or I'm going to get filled at Soxel and have an average at 13 going into next week. It looks like we're trying to build higher lows here. We might not get it, but it is what it is. I'm not really, I'll sell put next week. But now that it came down to a nice spot, I figured that I'd take the risk reward from here on this guy in that portfolio. So that's the deal. That is the deal. Going to stay in cash for a bit. That's not a bad idea. I'm loving NVIDIA. Yeah, I mean, the bad news, I figure the opportunity I think here is to buy this pullback, especially if you look at NVIDIA's chart. Gap downs, like it's still coming. It's really coming into this nice area. Volume down to like 125, 120 really. Was a consolidation back in 2020. So I like it. I like it a lot. Pandemic lows were, down here towards like 45. So it's got a long way to go to come down to that. But you've given back, a very fat chunk of the, this rally. So I like the risk reward here a lot better as it comes lower. So that's why I like Soxel. That's why it's got hit a lot more on Soxel. But that's why I also like that too. It's gotten beaten down. So this is the time, at least for me, doing what I, like to do the most and buy when no one else wants to buy shit. But it can bite you in the ass for sure. We'll see. Here's the fear and greed index. You can look at this and say, oh yeah, it's in fear, not that much. Sure. I think what's more telling or a little bit more important to look at too, and I've been focusing a little bit more here because we've been watching this. If you guys go back and see the past streams and videos, we've been watching this, and a lot of you guys have been mentioning too, and we've been really looking at this like this has been beautiful to follow. Now it's not nothing's 100%, but these big troughs or valleys have been great times to buy puts or to trim off of longs. And these spikes have been great times to buy the dip and to get into calls or whatever, right? And to get out of shorts and whatever. Because you're just seeing the motions of psychology just go back and forth and doing the whole thing. Right now, we're at a point where, hey, on average, this number should be around 0.7. That's like your average. So we're almost at, a flat even in terms of puts versus calls being bought in the market right now, which is kind of crazy on the 5-day moving or the 5-day average. So this is high again. It's higher than all these past, peaks, except the lows that we saw in June. So if we're gonna go to new lows, if we do go to new lows on the S&P, I would expect that this is going to potentially, push over well over 1 and maybe make it a higher high. But if we don't go to new lows, then, we probably won't eclipse this high on the put call ratio. And we'll see. That's the idea. But it's been really fun to watch because that thing has been, like dialed in terms of just walking you through the psychology and how this has been playing out perfectly this past, couple of months. So, and it's great. The video title, because I set the live. I had to set a title, right? Like, I don't know, this morning. And then this morning SPY was ripping face, right? SPY was up here. We're up like 1+%. And then, I come back, I'm like, holy shit, SPY's back down 1%. Honestly, a pretty wild move. Like this is not necessarily a great, it's a freaky move. So it definitely scares a lot of people and gets people excited about buying puts for sure. Hence the put call ratio or, why that's going to stay elevated, I think, until we get a substantial rally back over 400, that put call ratio will come down. But if not, people are going to be, chomping at the bit to get into puts or, jumping around. Sure. But yeah, we had a look that was like, okay, we have a chance to break this bull flag. And I see this, we've seen this many times where, you have a strong finish or a green day the day before, a gap up and go, where we kind of tried to fill the gap back down, got pretty close, filled it on IWM, filled it mostly on SPY. Then you start pushing up. And these big wicks were pretty telling too. When I saw these, that's when I made the title of the stream back then. I'm like, oh, these wicks are getting bought up. Only thing was that I would have liked them to be closer to VWAP. They were not. They're a little bit more elevated over VWAP, but it is what it is. And when I saw that, I was like, this has the look of one of those, just we've seen it many times where, let me kind of zoom out on this a little bit more, where we've seen this thing go from like, let's see where it's at right now. Let me just get rid of that guy. Okay, here we go. Do this where it's just kind of chopping around, have its little push up, kind of just build higher lows, just trend super slow all day, and then into the close, boom, little rally, face ripping rally. And I thought we'd get up to like 404 as a possibility, because if this resistance broke, we had a chance, I thought, to fill, or to at least come up towards where we closed out last Friday, which is around this 404, 405 area. That was a realistic spot. On SPY, 407 is going to be the next super, I think, strong resistance. We shall see. But I thought if we got that breakout, we can get it. And then, of course, that did not happen. That did not happen. Last few days have thrown a lot of people off. Yeah, I'm surprised. I mean, I'm not, going to kick myself over it necessarily, but, I was come back from vacation thinking, okay, feeling good about portfolio being the same as where I left it, given that we moved on SPY down like $30. I'm like, oh, that's pretty good. So it could have been a lot worse, in hindsight, looking back. But I guess, like I always tend to do, deployed a little bit early. So I deployed probably a little too much cash a little too early this week, and took the hedges off, I guess, realistically a little too early. But they still hedged for the, at least a good chunk of the move down, they hedged. So, what are you supposed to do? What are you supposed to say? No one's going to time the exact tops and bottoms. But looking back, the way I'm kicking myself is that, hey, I was watching this 10-year. Here's the 10-year. I was watching this 10-year, and the 10-year didn't tell me to get out of the puts. The 10-year didn't tell me to start buying the dip just yet, to be honest. So looking back, probably could have done a better job of that. But we'll see, in the next six-ish months, what the reality is going to be. Was it a smart play? Was it stupid? Could I have timed it better? Did I really make a mistake? We're not going to know for 6 months, really. I guess we'll probably know sooner than that, but give it 6 months and see where we're at. But yeah, we eclipsed on the 10-year. We eclipsed the highs of May. And so we're making a run towards those highs. I don't know. I mean, we got stopped just here, like just under 3.3. Overshot it a bit. We'll see what happens. It's pulling back a little bit today. Don't get too caught up in that move because it's still building higher lows. It just retraced back to like pretty much where it was like yesterday. But that acceleration of this move, if you zoom in a little bit, it kind of got a little, it's kind of making a bigger, little push to these highs, in a pretty short period of time. So it's starting to get a little more parabolic. We'll see. But you have to watch the trends. The trend's still up. You can't deny it. Here, that's actually pretty nice trend. We would have to come down. If we start to fall back below like 3.1 on the 10-year, then I would be getting more excited to buy the dip, or I would get more excited about, seeing green on the markets. Until that, the trend's still up, so you can't deny it, and it's still that's been what's pressuring us, it seems like, for a lot of growth. Even though if you look at certain growth names, so I guess the S&P is not down to new lows, but ARK is up to, what is ARK at? 40, just under 41. Its lows this year are 35, so it's like $6 off the lows. Still got some decent room to come down, which I guess it kind of makes sense if you just think about where the 10-year is to, let's say, ARK, a good growth proxy, right? The 10-year, if the 10-year probably pushes up to these highs, the highs of this year up to 3.5, we're probably a good chance that ARK is coming down towards that 35. We're probably around the same spot. So yeah, the 10-year is going to be, it's been a good guide, at least. So it's been useful. I'm surprised that, I guess, the good news is that if you look at the, I'll show it again tomorrow, but where is it? I can just pull up TradeZell. It's probably easier to see. Small count, I can pull up some of the stats. Pretty cool. I mean, we're up now net after 56 trades, starting with $100, added 50, so $150 total all in. We're net up 25, which is, I guess, in 2 months, from percentage basis, it's like, okay, it's pretty good. Wherever the number is, like it's like 20-ish, 15, 20%. On a percentage scale, but you can't really look at that. The glaring problems, which we talked about in yesterday's video, is the winning trade versus the losing trade. So at this current, risk reward, you're just asking to, well, not you're asking, you're just requiring a, substantially higher win rate, So you gotta, and I'm going to do a better job, and that's the goal, to get these numbers to come down to closer to even. I'm not expecting them to come back to to see the winning trade be way higher or eclipse the losing trade right now. That's going to be something I think that will happen as the account grows. It'll be easier to do. So I'm have to rely on the win rate in the meantime to have clips, to make up for this. But still, we have technically have a profitable, system as of right now, as the past 2 months, and we'll see if we can keep it up. All right, let's see. I want to check back into some of our stocks here. Soxel, I really kind of want this to finish under 13, man. It's at 12.90. We got 45 minutes. Can we get Soxel to finish at like 12.99? If that's the case, that is like perfect. But yeah, if I have that $13 put that we're gonna have, hopefully get filled. I want to get filled, but it's possible that we don't if this pushes up. It's close. We're gonna be very close. Going long the British pound since the dollar is parabolic. This FXB, yeah, it could be an idea. Let's look at it. That's one way, I guess, to play it too, right? So this has gotten annihilated, right? Yeah. No, yeah, this is not a bad idea. And you can, percentage-wise, right, it's not going to be massive, but I wonder if you can play options on it. I guess you're just asking for trouble, right? But if this moved from, we're at now, like, 110 up to like, I don't know, 120, 130, 125 in, a year or two or 6 months, I don't know how long it would take. It's not bad, but it's not a bad idea. Let's see, FXB. Can you get? Is there options on it? Let's see. Yeah, there is. So you got weeklies. You can play out to like March of next year. A monthly, sorry. March of next year. Not much open interest, unfortunately, though. But shares, not a bad idea. Not too shabby. What's interesting is PPSI. Believe it or not, it's got some volume past day or two. Look at PPSI just riding that 50 SMA, just didn't fall below. Beautiful setup so far on PPSI. Same with POLA, holding that 50 SMA. It looks like these things are both getting a little more volume today, a little bit extra volume than usual. We'll see what happens, but I do like them into the next. Yeah, they both got a lot more volume than the past like 2 weeks. Let's check in on the storm situation. What do we got? Let's see what we got over on in the Atlantic. It's been super quiet. There's some stuff now. We got a hurricane. What is this? Hurricane Danielle. Jeez. But yeah, there hasn't been many hurricanes. Like this has been one of the craziest years. I don't want to say one of the craziest years, but in terms of they forecasted an above average year, and we haven't really gotten it. So as of right now, I guess you have hurricanes up here and whatever. But the key you want to look for is stuff that's like threatening to land, which is terrible to obviously hope for, but that's ultimately the reason why you have those positions on, is because if it happens, they tend to get a run. So this one, that's not going to be one. There's still like nothing threatening in the next like 2 weeks. Nothing really threatening land, at least here. Even the Caribbean, or Mexico, not much, which is kind of crazy. But they're getting more attention. So we'll start to see what happens. They'll do well, I think, if either way, if we get some stuff forming, even if nothing hits land, they'll probably do okay. I'm thinking. Let's see here. So SPY holding this higher low versus yesterday for now. So I guess that's a good sign. This big move down today is kind of grosses me out though, but for now it's a good sign, I guess. What else we got? So watching the 10-year, and the 10-year got the trend line now on, so we're watching that. Oh yeah, DXY. Let's look at DXY. It's, believe it or not, it's had a big move this morning, I guess, right? But believe it or not, it's still got these higher lows, but it's really struggling to like truly just let it take that next step. It seems like it kind of pulls back and pushes up, pulls back. So we need to see this thing like probably pop 110 and go for it over 110. I would say as for like the next leg up, because it's been kind of slow the past like, I don't know, week and a half, 2 weeks, roughly. Slow. Nothing. It's still it's still up there. And then I was seeing, let's see. I wonder what mRNA is doing today, because this is not cool. This is another interesting fact too. This has been the whole, like, I don't even understand this whole stupid mess. Like, I don't know what the hell is going on in China. Like, I really don't understand it. Is it like every little surge you're gonna freaking lock down? Like, what the fuck? Like, what is this? Like, I don't understand. other countries are, I feel like, handling it completely differently. But like this is like legitimately what's happening right now. I think it's kind of wild to see this, but it is what it is. This is from March 15th, 2022. Okay, whatever. But yeah, 21.2 million residents locked down. That's freaking a ton of residents. But we were seeing mRNA. XBI was doing good yesterday on that, and the market was weak today, so they're down, I think, or at least XBI was down. What's mRNA up to? It's like kind of flat. It was up earlier. It was up. It opened, pushed up to like almost 141. But it had a really strong finish yesterday. I think that was part of what was happening. The China lockdown news is coming out, and so this thing kind of ripped off to the upside. But it's a funny stock too, because you're looking at this thing as a potential as well, inverse head and shoulder setup, whether you like mRNA or not. But look at that. That's a really nice setup. If it holds this recent low, or really risk reward from here is pretty good on the bigger picture scale. This stock is volatile as hell, and the chart, is there. It's definitely there. 50 SMA is up towards 199, $200. The range is certainly there. It's a stock that doesn't shy away from having some outlier days. Struggling to break out. Dollar could be. I think if the dollar really came down, something like what happened with oil is what you're that's how it feels, right? For the same with the dollar and with bonds. So if you look at oil, right? Oil's, honestly, it still looks pretty weak. It looks weak as hell still. Right down to the lows of not this year, because it started this year lower, but to the lows of this, I don't know, past 5-6 months. This thing was really just trending, and then the backside came, and it came within about a month or two. Boom, you are just, this thing took a hit. So I feel like that's kind of the same deal you're looking at. It's probably going to happen at some point, on bond yields and on DXY. But the question is, when, and timing that is the ultimate, the toughest part. Ultimately, the toughest part. Everyone gets super ahead of it. Oh, here it comes, and then it just catches a bid, and it's back up. Here comes the pullback. Oh, catches a bid. Same with the 10-year. The 10-year look really. This is a pretty extreme trend to the upside, which I have my doubts. These super steep trend lines never tend to always work out. The longer they go on, the higher the probability this is going to crack down. But so I mean, this was looking super strong, and then eventually you had a pretty big pullback from 3.5 down to 2.5. That's a pretty freaking big move. Hence the big move we saw in the market anyway, right? So now we'll see what happens here. I'm thinking even a move from where it's at now back to 50 SMA to the 290s would be a pretty nice pullback. And then I think from there we'll have to see what happens. Do we kind of do this, or are we about to head off even further? The reality behind this play is that at some point, SPY just had a new low, by the way. The reality behind this is that at some point you are actually going to get a Fed pivot or just a pause in rate hikes. It's going to happen at some point. It's just the market trying to figure out when and trying to time exactly when. Bond market will be ahead of the game, but that's what you're playing with right now on the 10-year. Yeah. Let's see. Let's jump over to. Let me see if I can find it. Countdown to the next Fed meeting. Let's pull this up and see where I'm still thinking that they're expecting a 75 basis point hike. Not as much, but it's still a better than 50% chance of a 75 basis point hike for the next Fed meeting, which is come down. It was 67, 68, 69, I think a couple days ago. And that's out for, what is that, 18? It's still 18 days. It's still a long way away. It's 3 weeks away almost. It's still a while away. So we'll see what happens. And you have a CPI in between as well, which should be interesting to see how that plays out too. But then November's hike, well, we can look at the probabilities or the comparison, sorry. So where's the market see the target rate for the Fed? You can see that today, at least, we've seen a pretty big bump. Maybe it was off the jobs report, a pretty big bump up in the chance or the likelihood of a 50 basis point hike. So the trend is kind of reversed a little bit on that. We'll see if that continues into next week before the CPI comes out, which will be the next catalyst, the big catalyst to move it. Here's SPY, by the way. SPY just flushed a new low. It's pretty, as we were saying, that move down was pretty nasty. looked pretty nasty. Yep, flushed a new low down to looks like 392.05 is the low. Bouncing a little bit now, but flushed right through. It looks like that is good news, at least for my Soxel. SOXL we're about 18 cents away from getting filled. I would love to, because the reason why, if I jump back to Soxel just on Robinhood, just to show you the option chain a little bit easier, it's a little bit bigger here too. If you look at Soxel and you go to the options, so once I have the 100 shares, it should be fun, because my next 6 months to a year timeline on this type of play, I am not worried necessarily, and it will be fine. Whether even it goes down sub 10, I'm not super concerned. But if you look at selling some calls and you went out to go out to the 9th, this is just next week. It's getting beaten down today. It's down today, so it's not going to be. Ideally, on a green day, these are going to be more expensive. But if you want to sell out, go out to the 15 strike and get paid $15, it's pretty good, and that's pretty far away. It's a pretty big move to get paid $15. So this is another one of those stocks that I think should supply another 10 to potentially $20 a week pretty easily until you get taken out, obviously, which will eventually happen. You go out 2 weeks, at a 15 strike, you get paid $40, or even get paid $25 for the 16 strike. I mean, those are killer play. That'd be killer, So that's why I like this one a lot. Volatile as hell. I like buying this thing while it's getting annihilated, especially with the ultimate Fed pause. As we kind of had that fake out of like, oh my gosh, 2 months ago, a month ago, everyone was like, oh my God, yeah, Fed's going to pause. And now it's like, no, they're not. Now this is probably a better time to buy anyway than buying into the FOMO, which we talked about too. But so we'll see, but this is going to be cool. This should be a lot of fun. And you can even play. Picture like something like this. Go out to, let's say, even October 21st, and you can do something like kind of crazy if you wanted to. Sell the 20s. Sell the 20 strike, get paid $30, and you don't just walk away and, you pretty much don't have to do anything. And if you look at where 20 is going to be, if you just zoom this bad boy out, that would say, hey, if in, a month and a half, the stock went up 60% or 55%, sure, I'll take the gains. Like, that's nice. Puts with a play, yeah. No, they were. Once we didn't break that, it looked like a bull flag this morning. Once we didn't break this, well, it was also resistance at 401. This 401 is key. Once we didn't break that, that was I was surprised by the move down. Absolutely, not absolutely surprised. I'm just impressed by how much of a move down we got and how fast that came. It's pretty impressive. But we're technically still a higher low from yesterday, but 390 is going to be kind of your spot. 390 is your spot for now. Gold, yeah. We've been saying it's not. I don't think it's going to be. It's a bad risk reward right here. It's actually up today. Gold, believe it or not, interesting. But yeah, no, it's right into the zone, and we have this zone down to about 1680, 1675. This is a nice risk reward for gold. I like. If it comes down below this, look out. You can probably see a bigger capitulation or something like that type of move down, for a bigger flush. But if it holds this holds this recent low from July, why not? I like it. You gotta be very strategic in this market. That's what it seems like. So a lot of people are, the way that you kind of have to view it too is stay alive. If you blow up, obviously you're out. And what can you do? If you stay alive, you're going to put yourself in the game next week and the week after that, the month after that, and it's that's part of it sometimes. Dumped my calls this morning. I feel bad for whoever bought them. Yeah. It's funny. Also, let me see. I was seeing some trend lines. I didn't even draw this. I didn't even think, but it's it's still, I guess, a little early to start getting excited about trend lines here. But yeah. If you wanted to do this and draw this trend line on the daily chart, yeah, you could technically. It does connect 3 times, so you have a nice little trend to the upside, kind of a wedge forming too. So if we do bounce from this 390 area, if 390 breaks, anything could happen going into CPI. So be careful of that catalyst and the Fed in end of the month. But we probably get some moves before those two things, because next week, right? Is it next? No, next week is clean. Next week is fine. We don't have CPI next week. It's the week after that. So yeah, CPI comes the week after that on the 13th. So yeah, you might get that move. But if we break this 390, I would honestly expect a gap. I would look for the gap fill down to 375 or 379, roughly. This box, I like. That's kind of what I would think. Also, it would break this uptrend. We kind of, and this is like kind of, we'll see, but would break the uptrend. It would be a nice target down there to fill that gap. Anything could happen, but that's not a bad target in my view. DC SPY on the weekly looking like it wants to drop. Let's see. It's a 1 week chart. I mean, outside of that trend line, doesn't. Only thing I see that could be concerning of that is going to be you're kind of coming into your lows of May. So this is another thought process or idea, right? This area could be an area that if we catch a bid and find support going into CPI and that CPI happens to be or taken good, that could be the bounce spot. Inverse head and shoulder setup. But again, that's front running the move before it even happens. We haven't had the bounce hold yet. We don't know. So, until that 390 breaks, I would say that the risk reward is better long right now, but add in the fear and greed. Yeah. Could this go higher? Yeah. But I mean, put call ratio is up to a point that we haven't seen really. That last time we got higher was back in June, and that was a massive bottom, or at least a massive reversal point. So, and the put call ratio has been killer. This is really helpful in times where we have volatility. And I think that would be right now. If we go into a period of time where you want to go back to 2015, I don't know, maybe I'm wrong. But go back to times where things are kind of quiet, relatively quiet. The put call ratio is not as useful unless we start getting extensions up or down. We get oversold, overbought. Like it's more useful. But in times like this, it's pretty. I think it's pretty useful. Let's see. The wedge isn't a bad. I mean, yeah, this until that level breaks to the downside, that's your support for now. But 390 was a spot that was held up in the past, was resistance in the past, so it's gonna be a strong one. I'm expecting. So, and then you can look at. I was seeing mixed signals too in terms of the people saying that individual stocks. People were talking about how like the short interest, and maybe if I find it again, I'll retweet it or put it up on Twitter or something. But individual stocks. Short interest isn't anywhere near the highest it's been the past decade or two, which is interesting. But because everyone's tossing around like, oh my gosh, there's so many shorts right now, this is going to squeeze, or not everyone, some people. So the people who are bearish, who are saying we're going to go lower, are coming back and saying no, that's actually wrong. But there's two conflicting data points. If you look at just S&P futures. I believe S&P futures, at least go back a week or two or whatever, they were at their highest short, interest level since June of 2020, right? They're a lot of people are shorting that, or at least, looking to do so. Individual stocks, not as much. Now, I'm not sure what that has to do with. I think it may have to do with just more so people in general saying, I don't want to get squeezed out by an individual stock after what's happened the past couple of years with some of these stock short squeezes. And they'd rather just say, no, I feel much more comfortable shorting the overall market anyway and not shorting an individual stock. Maybe that's the thought process. I don't know. That could be kind of an answer to that. But as we speak, SPY is pushing new lows. Boom. Jeez, man. Maybe we'll get a test of, we got 25 minutes. Maybe we'll get a test of yesterday. We have a good shot to do it, I think. Also, long weekend, the thought process of who wants to hold into a long weekend after a pretty rocky week. Yeah, sure. I can see that too. If we had a move up and we broke high of the day here this morning and we pushed up and kind of trended up all day, I would think the opposite. I would think more of a short squeeze into the weekend, but now it's the opposite here. So I think you can see more panic. There's actually a very good chance we're going to come down and test yesterday's lows, 390. We're getting close. Yeah. That's a pretty big move down. So we'll see. We'll see. We'll be here for the next, 30 minutes or so. We'll see what happens. But looks like the good news is that I'm going to get filled on the Soxel that I wanted to get. And SoFi, I think I got. Finally, SoFi is funny. We talk about SoFi for so long. Finally going to get in around 6, or it's up in the 5s. But my puts I sold were at 6. Finally going to get in SoFi. Seems like it's been a long time coming. I've been very cautious to not get in. I guess looking back, if I got in June, it would have been fine too, or when it was down in the 4s or 5s, it would have been fine, but took my time to get into that one, and we're finally looking at it. I was seeing people talking about Palantir recently too. What is Palantir up to? People talk about Palantir, and this is one that I also don't necessarily, I don't disagree with the idea. However, you just broke the trend. So, a couple weeks ago, when you broke this trend, you flushed off even more. So yeah, until the 10-year reverses, something happens, more macro, this is going to be kind of just dead in the water. But the risk reward here, if you got patience on shares, if you're not buying next week expiration calls, risk reward here on shares is pretty good, I would say. I'm not sure you want to talk about from a fundamental perspective. I don't know. I really, sure, you have the bull case, you have the bear case, and you have people going back and forth, and this is a $2 stock, it's a $50 stock. You know what I mean? I'm looking at this chart and saying, relatively speaking, this thing has been annihilated, and it's a pretty popular retail stock. Everyone who was retail, loaded was locked and loaded in here. Chasers were up in here, and this entire time down has probably flushed out a lot of people. Probably has. So the risk reward's so much better now on something like this. Yeah, SPY is. I think we're going to break. We're gonna test that 390 now. We are very close to doing so, and the pressure just looks pretty impressive to the downside. I think we're probably going to do it as we speak. So it's pretty hard selling right now. Don't want to hold a long weekend. I'm not surprised. You tend to see that sometimes too, especially after rocky weeks. So I'm seeing some stuff. Speculators' net long bets on the U.S. dollar rose in latest week. So that's not good in terms of if you're trying to go long the dollar. I mean, if you're going long the dollar right now, sure, could it keep going? Yeah. Your risk reward sucks. Your risk reward, you are asking to get just slapped if you're going long the dollar now, I think. Could it keep going? Yeah. But I mean, I don't want to. Why would you want to bet on a parabolic move right now? If you squeak out and you're scalping it for a little bit, yeah, maybe, but it's not a good risk reward in my view. Kyle's popping in for a few minutes. Hope everyone is doing well. Hope Kyle's doing well too. And, we're hanging out. This has been funny. This week has been funny because I come back, felt pretty good, started buying certain things that I wanted to buy, and then just flushed this whole week. But in the grand scheme, 6+ months from now, am I going to care? We'll see. That's why I'm liking the FXB. I think so. But you got to be careful because just like that, just like anything else, like these things, these bigger macro type of trades, because that's more of a macro. Like individual stocks can move, ton faster in the short term. You talk about penny stocks, they can go crazy in a very short period of time. Large caps may take a little bit longer, but they can still move a lot. You start looking at bigger things like bonds, like currencies, like gold. Those tend to be a little bit even slower than that. So you got to have patience on some of those moves and be okay with things taking a little bit longer than you maybe originally thought. Again, it's just like one of the biggest things. If I step back and look back to like what we were thinking and what I was thinking, literally like, back in here, right? Was like, I think it's good to start taking off of longs, which I did. And then we kept going higher. I was like, oh shit. Like we keep going higher, getting kind of squeezed out of, hedges and shorts in a sense, nothing like crazy. And then, it just took, we were talking about that, August 13th, 14th, 15th, right? Here we are, 2.5 weeks later. Now we got a big move down. Now you got the move down, but had you bought August expiration contracts, you're looking like, oh shit. You buy September, October, you're feeling so much better on those hedges because you had the ability to hold yourself in that trade a little bit longer because you didn't get destroyed on that kind of final little push up to that trend line, up to that 200 period moving average. It just takes a little bit longer. The patience sometimes just like on some of these more swings, or I would say more macro view in a sense. Not that it's like a super long time frame, but like bigger picture, you got to give yourself the time. So, yeah. All right. Currency's slow. Yeah, they definitely do move slow. Spitballing ideas. No, that's good. That's a good idea. I mean, there's nothing wrong. I like the idea, but we shall see how she wants to play out. Let's take a look. I still got that stupid Mullen. Looking back, had I have dumped some Mullen a couple days ago? Wednesday, yeah. Spiked up to 75 area or so. Could I have dumped a little bit into that and rebought it, today or yesterday for lower? Yep, could have. Could have, would have, should have, but I, still looking to have that meme sort of exposure, if you want to call it that, I guess. So we'll hold on to that. Let me check out. Oh, yeah, Upstart. That's another one that I sold a put on. Oh, yeah, we are going to potentially get filled here, too. We got 20 minutes. We're going to see. So Upstart, in the Robinhood, I sold a 24.50. We're close. Upstart could easily, if we had a little bit of a bounce into the close, Upstart could easily come back to 24.50, right? It's only 20 cents away. But I sold a put here as well. I like this too. I really like this one. It's a pretty volatile name, and I think the upside I'm targeting, as crazy as it sounds, this gap fill. So it's kind of like a penny stock bottomed out swing trade for me. I'm targeting up here towards like 70. It's my spot. So we'll see if we get it next year. It's probably like a next year thing, unless craziness happens this year. I don't know. I'm not sitting here like guaranteeing it, but into next year or so, it's a 6+ month or time frame just buying the shares. I'm not really super worried, but that's what I'm targeting on it. So we'll see if we get it at some point. So it looks like if this finishes below 24.50 on the day, we are going to be in Upstart, and that's three. That's going to be three things. So on the Robinhood, this should be Upstart, it should be SoFi, and it should be Soxl. SOXL. Those three are the new additions to the Robinhood portfolio this week. If we do finish week here, which looks like we're going to finish week, but you never know. We've had some crazier finishes than this, right? Let's see. You can never have enough cash, though, at the end of the day, right? It's always how you feel. You never have enough. I'm curious to see how this is going to finish the week out on the put call. I'm expecting around one plus. I'm thinking over one. We'll see what happens. This is at 0.98 right now. Once it refreshes or reloads, I think we're going to get over one again. Maybe even into next week if this thing stays this week, because this is a nasty. This is one of those days. I think, from a sentiment perspective, if you look at SPY, you had a pretty solid. You were looking good. You had a bounce, right? These are one of those days where it's so easy to pile on puts down here versus this morning. You had a pretty nice bounce, and people are like, oh shoot, we might actually go up, get ready to kind of buy the dip, or ready to go long on some stuff. Then this midday to afternoon sell-off is just a slap in the face, and just like it's a sentiment killer, right? So you're gonna have a lot of people who are just gonna say, yeah, screw that. The emotions are gonna get involved here. And does emotions, does it always mean like, oh yeah, never trade with emotions? Like, you can be right. You could totally be right for some time. It's just that in the majority of times, bigger picture, you're gonna end up screwing yourself. Or the risk reward isn't as good. So risk reward obviously this morning would have been great, if you were looking at the charts and saying, hey, like I like SPY. If SPY can't break this 401, which looking back, it's what I should have been looking at. If it couldn't break this 401, I want puts, versus this level, was the key spot the past week. And once it didn't, boom, get in puts. Quick risk reward stop out would have been over high of the day. So you could have looked at this and said, hey, we're flagging. I was looking at it, and this is my mistake. And I thought with these nice big wicks that were getting bought up, I felt pretty good about going long up in here. And then I got stopped out as we cracked below VWAP on the play. But I thought this could be a good for squeeze out into the close of the week, but the exact opposite was the case. So it is what it is. Always want to scale bigger and bigger. That is true. It's kind of how it goes, right? You never. That's a downside sometimes to a lot of people, me myself too, is not. You always want to have money in, as I said before. You always feel like you got to have money in. And sometimes, like, it just legitimately is just stupid to do so. Like, you always feel like you got to have something. And if you're going to do that, if you're always feeling like you got to be long something, or you got to be in this stock, it's oversold, or this stock, if you're going to do that and you don't have a good feel about the macro, view of the markets, the economy, all that stuff, you better have hedges on. If you do have a feel for the macro, then fine, go for it. Take your, go all in, or, always be fully invested in whatever you think is going to be the case. But you can get slapped around, pretty good. SPY put against that 200 moving average, man. That, looking back, was a beautiful setup. Here's what we're talking about. This orange line, this circle right here we have, that was a beautiful spot. I'm going to get rid of these circles here because we kind of already, we had drawn that third one in before we got there, and we're like, hey, this could be a good spot to go short, and it was. So, but yeah, that 200 moving average was like a beautiful, like super hard resistance, and we've just been slapped since. Not to mention, a little Powell punishment as well, right? Powell just said, screw the markets. So, Apple, TQ, yeah. I don't want to even get excited, or I don't even want to look back because I had TQ, QQ 40 puts for September 16th. Dude, that would be worth $15+ I don't know how many I had. I had a decent chunk, I think. Each, they'd be worth $15+ each. $1,500 each on those, man. Jeez. Yeah, no, but like, looking back, I sold those like into this Friday flush last week, and could have got a little more out of it. Yeah, sure. But I lately been doing good at holding cash. Yeah, I had, and I think this week we'll see what happens next week, and coming weeks. But I think I may have got a little bit ahead of myself in terms of adding into stuff. I could get out of some of the smalls that I got. I got into like some not stupid small caps, but like, do I need to be in, the meme exposure small caps that I have just because in case, we go risk on again, I want to have those as, I want to have exposure to those because they can turn around very, very fast and, double, quickly on some of those guys like the SDC, the Mullen to plays, which are bottom now, obviously not playing like the meme, like AMC. Those are kind of overused. But I think like the Mullen play is a pretty nasty meme exposure, pretty high short interest stock, I think. Same as Smile Direct Club. Also, those two had run up, and just looking at in the past couple of months or weeks, whatever. But now that they've come down, grabbing them much better risk reward while everyone else got bagged and is, in from like, double the average, right? So having those exposures is, I could get rid of that because that's not necessarily something that I, care to really hold too long. I guess I could get rid of some of those or clean up or trim some other stuff, but we'll see. I did deploy a decent chunk of change this week. Look for longs when the time comes. Yeah, exactly. NVIDIA right now it's solid. Pace being contrarian. I sold everything this morning. I'm 69% cash. I love it. I mean, I definitely want to get more into that way of doing things, of going, and that's probably something that it's been I don't want to say a challenge. I guess it has been a challenge. More of like a mental thing of like, again, feeling like you have to always be in. Something that's killed me in the past, like a ton. That feeling of always having to be in something or in the markets or whatever. SPY kind of almost double bottoming here. It got like within like 30 cents or 40 cents of yesterday's lows. So far it's holding it for now, but we got 10 minutes left, so a lot could change. But yeah, I think the goal is going to be after, because it will come at some point after this crazy market volatility, right? So once either we're going to flush out, have the biggest crash of everyone is predicting on social media, some people, not everyone, of a lifetime, the bust, whatever you want to call it, or, we're going to have, a nice kind of rebound and whatever will eventually kind of, the legs will come back under the market and we'll kind of, do whatever. Once we get back to kind of quieter times, which I'm maybe expecting into next year or something like that, I think the goal is going to be to get rid of, or to play the Webull account as a pretty much a day trader or very short-term swing, like week to week. So it'll be mostly cash like every night. That's the goal. That's the plan. And then the Robinhood will be the one for, the swings or whatever and the selling calls and stuff like that, or the more swing tradey or riskier. I guess the day trade stuff's more risky, but we'll see. We also have, working on the small account stuff and building out the data for that too. So we'll see what happens, but that's the plan. I would like to be able to go more cash because I have to say, I do hate the fact that like you tie up all the money into positions or, most of the money into positions, then you kind of like wait it out. I do like being more active and stuff, and I do see opportunities day to day, so I think there's something there, but we got to prove it to ourselves first, which hence the small account challenge. Again, if I'm thinking on that too, if I or anyone else, right, try that and do it consistently though, like start from a small amount, right, and do it consistently, track it all. If you never really tried, you're going to learn a ton about yourself mentally in terms of what style, strategies, all that stuff you're good at, you're going to see, your results and your data will be very, very apparent. I'm seeing it very, very clearly, like what the heck is the problem? Because if you're just doing stuff like willy-nilly, right, taking trades, doing this, taking swings here, this, there, and you're not tracking it or looking at any of the data, you're like legitimately never, you might think, oh, my problem is I cut my winners too early, I take profits too early, or I cut my losers, I wait too long and cut my losers. That's a very common thing. But like in 2 months of the challenge, did I think that my average winning trade was only going to be half the size of my average loser? I didn't think I was that bad, but I have been. So you realize how stupid you tend to be, or you can be, and how like easily that could destroy you. And that is stupid. But like thinking that I was closer to like 50-50 was maybe what I thought. In terms of, or in terms of, okay, I'd risk $1 to make $1, overall, you risk 1 to make 2 is or more is what you want to see. But I thought, after, executions and all that stuff, maybe I'm closer to, risking 1 to make 1. No, I'm actually much worse than that. But what I found is that my win rate is better. So my win rate is better than a coin flip, which is awesome. But you have to have the risk management in line. And so if that's not in line, then you're going to screw yourself. So it's cool to do that on smaller accounts. So it's not as much pressure, not as much worry. So you don't have to I'm not risking, my rent at the end of the day. Stocks are looking sexy. And I think so. Looking to buy all 100 shares and let it ride. That's what I am set to do. Let's see where it's at. I got a 13 put. So for this week on the Robinhood. So let's see what happens. Where are we at? 7 minutes to go. Can we hold it under 13? Oh man, don't rally into the close. Don't rely into the close. I want to get it because the options, the calls I could sell against it are going to be fat and juicy anyway. So, and I like the risk reward on the stock to make a move back to $20, which would be sick to have that as part of the portfolio. But we may not, maybe next week it'll go lower and we'll get a better opportunity. So maybe we'll see, but I'm hoping we close under 13 this week so I get filled on it. We shall see. And the semis are getting killed right now. So yeah, with time, if obviously the 3x ETFs, you're asking for shit if you're going to be, if you're expecting them to bounce like tomorrow, and that could hurt you because of 3x ETF, and the timing, you don't want to be holding that forever for us to flatline. It'll burn you if you, realistically, but the risk rewards is there. May unload on ARC next week under 40. Yeah. Handwrite every trade in a notebook. Oh yeah, that's cool. That is killer. That's useful because a lot of people don't take it that far. But if you and that's the thing. Like realistically, for me, what I found myself is like, yeah, I did the log on Excel or whatever for the challenge, but it took me to do the challenge to start doing that. But outside of that, I have gone through phases of writing things down and journaling, and I used to do it a long time ago, or not a long time. I used to do it like religiously. But you just find yourself falling out of that. So I'm like, geez. So for me, the platform that I pay for was like, you know what? For them to essentially do it all for me, I still have to do some stuff, but for them to do it all for me and put the numbers in front of my face and say, here it all is. Like, you don't have to do anything. Like, this is what your numbers are. These are your stats. I was like, you know what? The value of what it's going to cost versus like me knowing that like I've fallen lazy and not done it is probably useful. So I'd rather do that. But now we're getting a freaking, oh my God, SPY just slapping the upside. This is going to, SPY is just bouncing hard right now off of this spot. Also make notes before making, that's killer. And but first off, to stick to something like that long term is awesome. Like that's the reality. Like if you do that long term, like you will find at some point, you will realize either I am literally going insane because I'm doing the same shit over and over and I'm still losing, right? And you're just not going to either you never change that, or you're going to see that and go, holy shit, like I need to stop doing this, and this because I've realized through all the journaling, I keep freaking doing it and I keep losing when I do it, right? That's nice. That is right. I used to be religious with that type of stuff too. But now you have, I guess you have technology these days, right? It's all in the data. It is all in the data. You will find. So, I mean, I am pumped about it because I love looking at data. I don't necessarily love the from my experience at least in school and stuff and college, I absolutely hated with a passion all the math and physics and programming and technical BS that I had to go through. But the end result, like the numbers, the data, the trends, like that's cool. Like I love that. I just hate getting to that point, right? I just like it. Just there's something that it's just like my mind's like, nope, there's a void all the time. But I love like this is so like looking at this stuff is so cool because I'm like, oh shoot, like now I got to work on. Okay, great. Simply put, cut my losers quicker and then let my winners ride longer, or make sure I dial my entries in to a better point. And if I just simply stick to something like that and dial that in over time, and I can change this, and this, let's just say the win rate stays the same, right? And I can change and modify these numbers and get them better. I have a profitable system, right? So that's what's cool about analyzing the data. Much more of a data analyzer, I feel like, than I guess back end at the end of the day. That's probably why I hated programming so much. Okay, looks like we're going to get it. Soxel, we're going to get this. So market ripped and then pulled back a little bit. Soxel here at 1278. We should get filled. I bought a decent amount this week too. I'm not going to buy any more right now until the close. I bought a decent amount of Soxel out to next year anyway. Let's see. Somewhat constant high conviction plays. That's also key too, because there's a lot of shit getting tossed around, and you could be, going here, going there, going left and right. That's why I think it's useful to kind of find your own stuff, build your own system to yourself that works, and then go from there. Let's see. Today's top gainer is only a 50%er, Vero. Not too many crazy ones. I guess the market was down a good bit, so that's probably why. So nothing crazy on the top gainer list today, surprisingly. Not surprising. This past week we had some good movers, but it's kind of slowed off a bit today. Let's see. Go back to this. Soxel, I just need this. It looks like we're going to get it. So we got about 2 or a minute and a half to go until close. We should be good there. Let's check in on Upstart. We're going to get both. So it looks like Soxel 3. Soxel, Upstart, and SoFi will be added to the portfolio. The Robinhood this week. Selling puts. Sold puts. Got paid to do it. And now we got entries on all those guys. So there we go. I feel on the math and coding. I feel like you actually like that definitely more than I do. For sure. I would think a very tight stop loss and a 3-to-1 would be good. Yeah. I think that's kind of how you have to do it. That's kind of how I have to do it on the small account, because with the options I'm playing, because when you look at 3-to-1 based on the stock, with the decay of the options that you're playing, sometimes it ends up being closer to like a 2-to-1 risk reward at the end of the day anyway. So the 3-to-1 is probably important just to have that cushion. So that's where I probably want to stay. If you had to start over again, what stock would you make your largest holding in your long term? Oof. Oh man. Let's see. I want to say, let's take a look at some of the top ones I have here. I would not, like if I'm just let's just go through like what I wouldn't. Apple would not be the largest holding. Market's about to close, and it's rallying a little bit into the close. All right, we're closed now. So we'll come back and check all the final prices, all that stuff. Apple would probably not be the one. Amazon would not. Although if Amazon came down under 100 again, yeah, I probably would be up there. Tesla has my attention. I would love to be, like a bigger picture Tesla, like, oh, I'm very bullish on it, but it's just a little too expensive in the long-term portfolio. From it's like, I don't know if I could say that. Let's jump through. So there's that. NVIDIA is interesting. NVIDIA could be, now that I think about it, NVIDIA could very well be. The lower this thing goes, especially the better, I think. This one is not going anywhere long-term. The only problem is that if you look back on some of these charts, a lot of these stocks have had mega runs. I think that there's more meat on the bone on stocks like NVIDIA, probably Tesla, potentially. Amazon, if it came lower, there's more meat on the bone there, I would say. But to be truly honest, what I would do long-term would be, in the back end of the portfolios, always have something like this. Always have a VOO. which is an S&P ETF. So you're in S&P 500 ETF, you're in. This is the backbone. This is what you, on dips, on paychecks, monthly, weekly, daily, whatever your time frame of dollar cost averaging in, this is what you load, and you just continuously bet on this over the long-term big picture. And you know that if you do that, right, yeah, could we go through a depression at some point? Yeah, maybe, I don't know, right? Could we have a crazy, decade or 5 years or 6 years of just like horrible time in the stock market where we don't go higher? Yeah, we could. But what do you do? What do you do? You just continue to buy more little by little over time. That's what I have for my girlfriend, who literally hates every time I talk about stocks, hates it, absolutely despises any time I talk about it. But I have her in VOO, and guess what? Every paycheck, X amount of dollars gets deposited in every 2 weeks, every 2 weeks, every 2 weeks. And then, we'll go in, or either if I don't think her broker has auto buy, which is kind of stupid at this point in time. Maybe they will at some point, but I'll go in and buy it, or she'll go in and buy it when she remembers, every couple of weeks when there's cash in her portfolio, because it just deposits cash into the IRA, cash, and then you just funnel it into this. It's tough to say in terms of my favorite stock. I don't know. I don't really have a favorite stock right now. Out of this list, I guess it was NVIDIA was my favorite out of the ones we just talked about. Let me see on here. Do everything that I really like in here. Shopify's interesting. Shopify's risky as hell though, but that's interesting. Intel could be good. I like Intel as well. INTC, much better, I think, valuation wise compared to like an AMD or NVIDIA. Much better. So an INTC is not going to be as flashy, but I think Intel is a much better risk reward right now from a valuation standpoint. That's one to throw in as an idea. Big picture, you've given back about, a good chunk of this move from, the past couple of years. So you're coming back down to levels you haven't really seen on Intel, and it's not as volatile as some of these other stocks that could potentially, if we went through a bigger, deeper, darker move in the S&P, some of those stocks could potentially, go down another 50, 60, 70%, right? If we went through a true crash, as people are saying, right? So it's a long-winded answer, but that's kind of a VOO is a solid. You can't miss it, right? And then outside of that, but the problem that I have, because I'm not like your long-term, focused person. Like I'm not like sitting here fundamentally researching every stock I look at. No, I'm much more technical, but I'm much more like short to medium midterm, right? Looking at the macro, but the macro always changes. So we do know, right? Obviously, the reality of the US stock market over time could change, right? But we know that, hey, if you want to bet on this market over time, you're probably going to be in a good spot 10, 20, 30, 40, 50 years down the road. So, why bet against that? It's almost proven. That's where I always say start with the IRA, start with the safe bets. Then you can work your way into getting into the more, short-term, medium-term swing type of ideas. There's, this thing is oversold, or I want to, short this thing, it's overbought. Then you can get into that stuff. But the backbone needs to be set, is how I always say it. So, Vissel. Yeah, don't even start about that one. Don't even start. Honestly, data shows last month I've been successful day trading and taking 2.6% gains. That's honestly a lot. It would add up fast. Yeah, no. But when you look at the data, that's key. Like if you look at if that's what the data tells you, and you can start to get disciplined to follow the data, you could be in a really freaking good spot. That's why that's why people always get super stressed out about like, oh my gosh, what about this week, tomorrow? Like, oh my gosh, like make money this and that, like super fast. Like the reality is, if you have a system that's working, and let's just say, for example, on the small account challenge, right? If the reality was that we scaled this up from 150, I was doing the math, like at the current pace, we'll see. And ideally the current pace has been kind of choppy, but if we, continue at this pace or at the recent pace the past, month or couple of weeks, you can be at $500 in, 2 months, in there, and go from 100 to 500 and, pretty quick. And then from 500 to 1,000 even faster. And then from 1,000 to 2,000 even faster. Like next thing you know, you start trading with, you're up there within a year, you can do a lot of damage. if you're disciplined and you found a system or a style that works very, very fast. You can do it very, very fast. So people get caught up in the short term, but it's like reality, man, this is a long-term game, but it's not. I'm not going to sit here and say that it's a long-term game for like the guys who are going to be the value dividend investors. Like, sure, that's always a backbone to the everything. So do that. Like that's like a no time needed do it. Like it's easy. That's easy investing. Like it's easy, right? Long-term. I'm not worrying about this money until I'm retired anyway. So or until I'm 65 anyway. So I'm going to let this thing work, right? Long-term. When you get into the short term, it's totally possible. It's a lot more difficult. It's battling and getting over the emotional side of things. It's so much more doable though. At the end of the day, than people think, because you can actually get the skills, or you can build the skills and learn the technicals and all these things that you can do that. The biggest battle is fighting yourself, your risk management, and sticking to your plans, which is so cliche, is so stupid, right? But it's like legitimately what it is if you boil it down. Going back to Vissel, right? I do want to say I will be back unless it runs VISL. Unless VISL runs without me in the next couple of weeks, I 100% will be back. This thing is, you want to talk about a setup for a beast? This is the play. I mean, you have a massive, huge, I guess you can almost say it's a massive descending wedge to just going down to new lows, and this is where 50-cent psychological area of support. Pick up some shares. The risk reward here is nice. The company's actually doing a lot better than the stock would tell you. I believe from last earnings and looking at this thing and all that stuff. Would have to double check before I get back in. But yeah, I mean, I don't dislike this as a small cap for one of those bottom spike penny plays, and boom, you can be in business on a spike. I'd argue VTI. Yeah, I guess you can look VTI, VOO. VTI whole stock market, or VT whole world for 86. Market bounce, market flush. It's just jumping all over the place. Why did the market go down today even though jobs? Nah, I don't know, because you have a long weekend. It's anyone's guess necessarily. There could be a million reasons why it went down today, right? We got rejected at this spot. A 401 was your resistance. 401 was support back on the 29th. Was that Monday? Or Tuesday? I think it was Monday. Was your support on the 29th, and then it was your resistance on the 31st, and then it was your resistance again today. You couldn't break it, and then you got a pretty big move down. Now, right now, you're dealing with a lot of emotion. Currently a lot of people just ready to sell everything and jump ship, and people ready to freak out and, whatever. That's kind of what you're getting back into. And why I say that is because the put call ratio, man, is back up here to 0.98. A lot of puts being bought. This put call ratio averages around 0.7 is kind of your neutral. And when this thing goes up over 7, 0.8, 0.9, that's telling you a lot of people are buying puts. A lot of people are buying puts. And what we know in the short term is that a lot of people are not right and don't win in the stock market. So could you be right? Could we go down even lower? Yeah, sure. But again, the higher this thing goes, the more powerful I think the reversal can be and will be. And that's what we saw back in June. This thing hit to a point we haven't seen in so long. And the put call ratio popped to 110. That's nuts. And what do we see from June 16th to August 16th? Literally 2 exact months. We literally just saw a massive rally on the market. And a lot of money could have been made in that span. So that's my only, biggest takeaway from look at the put call ratio and sentiment wise and whatever. Charts will be the charts, but that also is telling as well. So we'll see. If I had never invested in 2022, I'd be up 45%. That's how I feel too. That's definitely how I feel you. I feel you. Yes. I had money to stop with the penny stocks, especially after comms, rather trade leverage ETFs. Yeah. No, I mean, and those penny stocks, again, and the same kind of thought process for me too, is I will come back to them. I will be there. I will still swing, a couple at a time, right? But I'm going to get a lot better in the future with understanding the macro and how much that actually affects things. So right now, I think it's actually a good time. I really do. In terms of from macro perspective, I think we're really close to that turn of the 10-year rolling over. of the Fed actually getting to kind of where it's expected to raise, and then the market, pricing, well, now it's not going to do as much more, whatever. I think we're actually getting close to that point. So I do think that the risk on nature, we've been so risk off for 6+ months, right? I think we're getting close to turning that switch or that dial even just halfway back risk on. And I think the risk reward on certain penny stocks selectively, I think will be there. But in the future, if we go through a time, 100%, I've now been through it, gotten slapped in the face to see it, right? If we go through another euphoric time where it's been risk on for so long, right? And there's no more penny stocks that are bottomed out. Like, that's literally what I was thinking to myself back in February of 2021. I was like, my trading strategy no longer works because there's legitimately not any more stocks that fit the criteria that I wanted to be. But what did my dumbass do? I kept buying shit because I thought it was bottoming out, or I thought it was a dip, and it wasn't a dip. You live and learn, right? But looking back, right, that's when I'm going to say to myself, in the future, if you see something even similar to that, there's no need to hold, the minimal overnight penny stock exposure or small cap exposure. There's just no need. There's much better. There's always opportunities, on large caps, always on 3X ETFs. There's always opportunities all over the place across the board there. So play that long, short, left, right. You can play a million different things. You don't have to always do what, you use or what worked during, this time or that time. And the same thing that maybe had worked the past 6 months at some point is not going to work anymore, right? So we'll get there. But, you live and learn and you figure it out. So ultimately, that's going to be huge. And you think that oh man, well, who cares, right? Whatever. People talk about, people's accounts and stuff. And you have people who come in with couple multi-six-figure accounts, talking to people who have a couple hundred, a couple thousand, you're just playing with peanuts. Yes, sure, fine, whatever, relative to someone else, right? Relative to you or who. But at the end of the day, the same thing will apply. If the person with peanuts now is learning from their mistakes, those peanuts are going to turn into a much larger nut at the end of the day in the future, and all their experiences are going to stack up to maybe they just nail something high conviction, nailed it 2, 3, 4 years down the road that is life changing, and you hear all these one hit wonders on the CNBCs, the Kathy Woods, the Bill Ackmans, the this and that, the Michael Burrys, all these people that I don't want to say they're all one hit wonders, but they have 1 or 2 solid trades or years or whatever. That's their claim to fame. Under the surface, how many people are there that do that themselves, but then give it back? For sure, there's a ton. But how many people can do that themselves and then stick with that and then roll with that? That could change their future massively, right? So as long as you're staying alive, staying in the game, and learning from your mistakes, it's always on the table, I think. So I have an account full of 95+% losers, a couple of 99.9% loss. I keep them as lessons, and that's actually cool. That's actually kind of interesting. You kind of look back and say, you completely effed up, but here's your lesson from the past. That's actually kind of interesting. Comms, yeah. Comms, VISL freaking destroyed me. I suckered myself in back in the stupid AHT. Remember AHT? This piece of crap. I suckered myself in, and I thought this is back in literally, I guess it's back in May of 2021. I was the dumbass buying AHT, thinking that we had a dip right here. I'm not buying the top, I'm buying here. Guess what? Offerings, whatever the hell happened. Next thing I know, I'm taking my losses down in here like an idiot. But you live and learn. AHT was like hype city. If you bought AHT, down in here, and you even if you sold it up here, you still made money, right? But yeah, it's just one of those it was stupid. It was stupid looking back. But I think that's hopefully helpful too. I know we're just hanging out on, it's after the close. We'll wrap things up soon. But, I hope that's useful to people, because the whole point of this, of what we do, the streams and the channel, the channel in general too, is these lessons, right? Because you look around, and to be honest with you, I don't know. I don't watch as much as I used to in the past. Are people on YouTube and Twitter and whatever. I used to do a lot. Now I just figure it's kind of wasting my time, to be honest, a little bit. Still check in here and there with certain things and to see what people are doing, and just to kind of get a feel for sentiment and whatnot. And okay, all that. And sometimes there's good ideas, from people give out good ideas. But the whole point is I legitimately want there to be a good resource of someone like literally going through it like step by step, day by day. Because there's a lot of people who will come on and whether they're truthful or not, they're either all the way up here, and there's few that are up here that are making, $30K a day, $100K a day, $1 million a month, right? On their trades. And that's absolutely, completely not even relatable to 99% of people, right? So then there's people who are, coming on and lying about their numbers and paper trading and whatever, and not showing the stats. I think that's interesting too. It's a funny kind of way things go and how things play out. But there's that. But like we legitimately showed all. So hopefully that's useful. And lessons learning, it's all good, because I'm getting slapped around, or I have wins, I have fat losses too. And we take it straight up, and hopefully there's value in seeing that from someone else, and it could be useful. So also a ton of good ideas in the streams. The streams are great because we have tons of good ideas we can toss around too, which is fun. All right. Let's see, scrolling through some of the comments. So back to zero after working my ass off and no income, sign me up. Oh man, let's see, scrolling on through. I lost so much money last year between margin call, potential gains. I sold early. Yeah, no, I mean, I got freaking killed too. It was ass. Like really, I'll be honest. I was a great trader until this year. Now I feel like one of the worst. I feel like that's how a lot of people feel too. But there's the other factor too that you think about when it comes to the pandemic, right? Which is what everyone talks about. Oh, all the people trading crypto and NFTs and stocks, now they got to go back to work because they can't actually do it anymore. And the pandemic market, the easy money's over. The thing is, looking back, I wonder how my progression, or how even a lot of our progressions would have been had we never had the pandemic market. Had we never had what happened, and had we kind of gone on, I don't know, normally or as normal without that craziness, the stimulus and whatever, the shutdowns and everything. Like, had that not happened, where would we be? Would the market, we wouldn't have seen what we saw in the market, right? And I think that there's a lot of people who were around prior to that were kind of figuring things out. That's how I felt. I had felt that since from 2016 to about 2019 was like my time. Believe it or not, I was like, I'm trying a ton of shit and it's not working. I'm getting blown up. I'm blowing up accounts left and right, this and that. In 2019, I felt like I finally kind of had figured out a really good strategy. That strategy just so happened to really blow up and work exceptionally well into 2020. 2021, it kind of altered slightly with things just kind of going higher and higher and higher. And so we kind of altered it a little bit. And then into early 2021, then of course it's not, the same strategies is not obviously working the same way anymore. I wonder if it'll ever come back, but it's been interesting. I'm really, that's part of the market too, right? You go through ups and downs and different times and different macro, situations. But I really wonder, because there's a lot of people out there who legitimately were very, very good, or were doing well, or were doing decent. This pandemic market was just so wild and so because there are people who literally were here prior to any of this craziness and who were like, I was fine with just playing the game as it was prior to all these idiots coming in and just starting to trade, meme stocks, right? But that was just this whole other spin that just kind of came in, and there's nothing we can really do about it, whether you like it or not. It was good. If you took advantage of it, it was good. It could have been good. But I think a lot of people made a lot of money, built a lot of bad habits, or not even built bad habits, just got played a little bit in terms of how the market was playing out. And then you turn around and now it's just completely different, which is how it goes. But generally speaking, I feel like it's a little bit slower than how fast things have been changing as of late. All right, let's see. Swings, Vessel. I got wrecked on pick. Yeah, no, I mean, it's funny. Used to make 25K a day. Now I lose 5 to 10K a day. Jeez. Well, you know what? As the time goes on, the lessons are learned, right? So you have hopefully a lot of lessons to be learned from this experience. But it's interesting. Mara 11s look good next week. I'm curious what crypto is going to do over the weekend. We'll see. But markets close on Monday, so we'll do a live. We'll do a live Monday night, right? Yeah, Mara's kind of trying to hold up here. It doesn't look bad. If Bitcoin does bounce and the market bounces, Mara's at the 50 SMA, so this could be a good spot for a bounce. Also, I had Mara 20 puts, by the way, too, which I sold at like, when it was like 14. Jeez, could have made a little more on that, too. Jeez. Cash secured put during, yes. I don't know. I'm not a big fan of the puts out to 2024 because you could. I guess it's a strategy. I haven't really thought about that, to be honest, because so much could happen between now and then, in my view. I don't know if I'm a huge fan because so much could change that might fundamentally change your approach by 2024. I think there could be so much that changes in the next 6 months that will change my approach by then, by 2023. So that's my only concern with it. Instead of just buying the stock. Yeah, I mean, you could. In theory. Back when stock traded on fundamentals, now I had it all figured out. Yeah, no, and that's literally that. I feel like 100% because there used to be a time when that made sense, and now it doesn't make sense anymore. But I think we all are slowly coming around to it, or some are faster than others. There's a lot more than. In terms of the movements, it's all perception. The way I kind of think about it, it's all perception, right? All perception. So is this perceived to be cheap, expensive, or what? Now, what drives that perception? A lot of things. Social sentiment. You have the macroeconomics. You have the Fed. You have so many things that could drive. You have, whatever people are getting fed by the news or by the media, right? About a stock. Could be social media. Could be, people on CNBC, right? So many things can drive that sentiment, but that's in that perception change that you can see on these stocks, and it doesn't have to do with fundamentals all the time. So when it comes to fundamentals, even on the big names, you can go 1 week thinking that, Amazon's selling off because it fundamentally, had bad earnings, right? Or it has bad guidance. Then 2 weeks later, the market could be risk on and Amazon is, regains all its losses and some, right? Does that make any sense from what we just saw from their earnings? No, but that's the perception of the market, right? So it's arbitrary. It's not like there's no perfect answer, right? And then same in small cap land, right? If you look at large caps and you think about these stocks and they're trading at X whatever of cash, right? They have like X number cash position and then they're trading, X times that, right? Some of these small caps are trading like substantially below their cash position. Like these companies literally have more cash than their market cap is trading at or is worth, right? But they keep going down. Like that also is something that we hadn't really seen as much of until the past couple of, past like year, right? I guess it happens in small cap land, but we haven't seen it as much until like lately, right? There were some stats. If you go back, there were some stats I was looking at from Bloomberg a couple months back, and we had been at the most insane level in terms of cash to market cap and small caps we've ever seen in terms of these things being oversold or, undervalued. So, I mean, you go through all that stuff. Good for receiving cash right now. Little hedge if it drops. Yeah, yes. Yes. It depends on if you're fine with that though, and you're fine with the time of it being, 2024 and whatever, sure. But I don't know. I mean, I'm curious. Like if we were to look at like an Apple, like let's say you wanted to do that for Apple. I know Apple could be a good or a bad example. I don't know. Let's go to June 21st, or let's go to January. Let's go to January 19th, 2024. And if I was to look at Apple and I said, hey, you know what, Apple, I love Apple. I'm going to say if Apple's sitting at the same price by then, I will be a buyer, right? I could sell an Apple 155 put and get paid $2,000, right? Take that cash right now and go run with it and use it whatever I want to do, I guess. And if Apple's at 155 by that time frame or by that expiration, all right, I'll buy it. I buy the shares. Maybe that's how you can do it. But the thing is, there could be so much that could change, in my view, in the next, year and a half. That I don't know, And I guess you could always exit the position if you wanted to or whatever, if you really wanted to. But that's my only concern about it. People say we're going through a valuation crisis. Yeah. And then what are people going to say when things start to turn around, right? you know, oh, it's all oversold, right? And then it's like, oh my gosh, flip flop central. Market's got a mind of its own, and the goal is to try. And the thing is, you can make that puzzle as easy or as hard as you want in a sense, because on a given day, and this is something that I've taken from others, but on a given day, there's a million stocks, there's a million opportunities, there's a million trades, but on that given day, there are certain outliers, or there are outlier names or plays or moves that are happening that give you an edge. And it's that you want to take advantage of. And it's finding that or developing, understanding through data, what that edge for you happens to be. And that's how you can take advantage of it. PE isn't terrible. S&P 1983. It's not. I think that is true. The PE came down a ton off of where it was. And then even was down even much lower, a few weeks back too, or back in June. Gold kind of caught a bid today. Yeah. No, it did. Jumping back to TradingView really quick. Gold was up. Yeah, it was up almost 1%. Silver was up 1.4. It did. It definitely did. Yeah, and it's in that same zone, man. I mean, that's the spot. Not if you're looking at specific miners, yes, but I think some of the small caps also. Let me add my LODE used to be a gold miner, but I don't think it is anymore. But I'll put it on the list because it used to be. Maybe people will give it a run just because sometimes. They're more like in the EV battery space now, which I feel like is just a bullshit pivot for them, but, it is what it is. Maybe it was a good idea, a year ago, but now you got it killed. And then they'll come back to probably, putting out some PRs about gold mining or whatever, let's just say if gold gets going again. There'll be some stocks. There's a bunch of gold tickers that we'll go through. We kind of have a list. I covered a couple of them, I think, recently, but that we'll watch and we'll be paying attention to going forward into the next couple of weeks. If gold does catch a bid here, I think that realistically for gold, it won't start to catch anyone's attention until it gets over 1,800. But if it does, then we can start looking at a lot of those oversold gold tickers to watch. Some small caps. If TQQQ goes below 20, I'm going all in. Silver, silver caught a bid today too. Yeah. YOLO, at least it's not GME. I bet you'll make some money on TQQQ. Yeah. I like it. I mean, hey, like if you think about it, it's 26. The lows of the year are 21.32. Yeah. Yeah. I do like it. I'm going to wrap things up here in a minute, but let's take a look at the 10-year. Yeah, it's still there. The 10-year finished today. It's still holding this trend. So this is our trend that we're going to watch. I think really into next week, under 3.15 will be key. I think the market technically, or futures will technically trade on Monday, Sunday night into Monday, and then we'll stop like at noon, I believe, Central Time on Monday, and then we'll pick up at 5 p.m. Central Time on Monday. I think that's how it works. So that'll be something just to kind of get a feel for. Just be careful because it just doesn't mean shit really at the end of the day when you're looking at it, but it'll be something to watch come into next week. Yeah. So we shall see. Plenty of arbitragers, so many unknown runners doing whatever. So when you can find something that like, hey, like there are people who are just great short sellers who just trade momentum stocks, small caps, penny stocks that are getting momentum and wait for the setup to present themselves of an, overshot into, a squeeze out and they come back in on the backside and they hammer that and that's all they trade and they do exceptionally well. Maybe that's, that is them, people finding out what works for them, what they're good at, and taking advantage of it. So with that said, I am going to wrap things up. GDX or GDXJ for miners. Okay. Yeah. People hold TQQ. No, I mean, not really. Because the 3X ETF has decay involved. If you look up like on Google and you get there's probably better explanations there than I can explain. But if you look up even videos about it, the decay aspect of a 3X ETF is not something you want to necessarily hold long term. Or leverage ETF. So you ideally want to hold them short term. If you think we're going to get a balance in the overall markets the next couple of weeks or months, great, buy some TQQQ or buy whatever. And then, that'll be good for upside in the next couple of months or weeks or days or whatever, or even just for a day trade. So with that said, I'm going to wrap things up. Monday and even Tuesday, we got some big stuff. We have a pretty, we'll see. You'll see it come next week. But Monday we have a pretty big appointment. Good news, the market's closed for that, so we'll see. We don't have to worry about that. But then we'll do probably a Monday night stream, and then we'll do a Wednesday and the usual Monday, Wednesday, Friday. We'll try to do more, maybe a Tuesday as well. But that's the plan. So with that said, have a great weekend, a nice long weekend. Markets are closed Monday. Futures do trade though, again, like I said. And we shall see what happens. I'll have a video going over the portfolio, all the positions next week. Really quick, I believe we are good on Soxel. We finished at 1286. We're going to be in Soxel. SoFi, we finished at 575 or 574. Yeah, we're going to be in that. And then UPST, all of these guys, I sold puts and we got filled. We're going to get filled on all those puts. So that's the plan. A lot of covered calls to sell going forward, especially if we get some green days and weeks in the coming months. Peace out, guys. Have a great weekend. I'll see you next week.